Good morning, this is Bill. All right, I want to tell you about a couple of new things. I'm recording this simultaneously while the team is out there trading in the trading room. I'm going to announce this over the next weekend. It's Monday morning, the 26th of October. We're looking at the standard market watch screens, gold, oil, the euro, and the pound. You'll probably notice some interesting new things. Um, I'm going to tell you about some new information that's going to be on the screen and a brand new signal. So let's start with the new information and something that you're already aware of and how it works, which is called pivot shorts and pivot longs. So let's look right here down at oil. This is a pivot short, okay? And the idea here is you go short on the next bar after price drops below the low of that bar, of the previous bar. I've made it more convenient for you by adding some code that prints out the exact entry for you. So you would go short here at 44.54 on oil, and as you can see, if you had done that, you'd done really well. A new thing that I'm introducing called the breach requires a little bit of explanation. So let me do a little theory here. One of the things that market makers get paid to do is to take your money, okay? And the way they do that is they do lots and lots of head fakes during the day to get you to commit to a particular position and then shake you out of it. So, for example, there will be an area of consolidation and then market makers will drive price up and it'll consolidate again, and possibly we would get a pivot long signal. So maybe we get a pivot long. We're expecting it to go long. We're waiting, but it doesn't do that, and instead it drops back down. Okay? The location where it drops back down is what I am calling now a breach. Breaches only work on pivot longs and pivot shorts, and let me show you how they work. Here is a perfect example on the pound. This morning we got a signal for a pivot short. It got really close, but it never quite fired. Instead, what has happened is we've gotten what's called a breach. The breach signal is depicted by the white bubbles, and all a breach is taking a position in the opposite direction of the signal. Once it breaches the high of the bar, if you were given a signal to go short, or the low of the bar if you're given a signal to go long. So in this case, we were given a pivot short signal. It never really fired. It reversed, and now it's going up, and the signal to enter the breach long is 53.46. And as you can see, had we done that and just done our standard 7-tick scalping strategy, we would have already made money here. Okay? So it's a really simple signal. You want to take the trade on the very next bar. That's the rule. But basically, that's all there is to a breach. It works the same in both directions. So if you get a pivot short signal and it breaches the high, that's your signal to go long. If you get a pivot long signal and it breaches the low, that's your signal to go short. Okay? Hopefully that all makes sense, and good luck. I think this will open up a ton more opportunities for you to make money. I've been testing it for about 3 months now with my son as the guinea pig, and we're pretty confident that it works. So good luck and have fun. Over and out from WaveriderBill.